You are now tuned into the Business Lounge, a forum filled with articles, interviews, and videos of entrepreneurs on their journey. Today we're going to be talking about taxes, as it's that time again. Now you may be wondering, how are the changes for 2018 going to affect my family? If I'm a retiree or a small business owner, how's that going to affect me this year? I'm going to discuss that and more in the upcoming video. Stay tuned. Hello, everyone, and Happy New Year, and welcome to the 2018 edition of A Few Tax Tips to Prepare You for This Year's Tax Filing Season. My name is Tillman-Josey, and I will be narrating this session, so let's get started. So who am I? One of my many titles is a tax professional. I received my training from an amazing group at Liberty Tax. I have a background in higher education administration and have recently directed my energy to the finance and insurance field. I am a small business entrepreneur and have several ventures I am actively building in those fields. So now that you know a little bit more about me, let's get into what has changed and stayed the same for 2018. So standard deductions have increased. For individuals who generally itemize taxes, the new standard deduction rates may eliminate the need to itemize. Itemized deductions are basically expenses allowed by the IRS that can decrease your taxable income. You can either take the standard deduction or itemize on your tax return. If your standard deduction is more than your itemized deductions, it might be worth it to take the standard and save some time. The standard deduction increases are as follows. In 2017, the standard deduction for individuals was $6,500. The new amount is $12,000 for 2018. In 2017, the amount for head of households was $9,550. The new amount is $18,000. And for married couples filing jointly, the amount in 2017 was $13,000. The new amount is $24,000. Now for parents and head of household filers, there are a few things that I want to discuss. There are 3 big tax credits for parents this year. The 3 credits are the child tax credit, the child independent care tax credit, and the earned income tax credit. The child tax credit now offers up to $2,000 per qualifying dependent child, 17 or younger at the end of the calendar year. This is an increase of $1,000 from the 2017 filing tax law. If you have a child that you have funded daycare costs for, you can get 20% to 35% of up to $3,000 of child care and similar costs for a child under 13, an incapacitated spouse or parent, or another dependent. You can also get up to $6,000 of expenses for 2 or more dependents who fall under these categories. If you are the head of household and you care for qualified dependents other than children, you can qualify for a $500 non-refundable credit, which will reduce what you owe, if any, dollar for dollar. Now let's go over the updates for volunteers and charitable giving. Nothing has changed here, but I do want to point out that if you travel as a result of volunteer work, you can claim 14 cents per every mile traveled. Keep good records on your charity travel mileage. In addition, if your charitable giving amount combined with the additional deductions does not surpass the new deduction rates, you may not see a significant difference in your tax bill. Now let's move on to retirees. In 2017, the tax rules allowed individual tax filers over age 65 to claim an additional standard deduction of $1,550, and married couples over the age of 65 could increase their standard deduction by $2,500. The new rules would increase these higher standard deductions for people over age 65 to $1,600 per individual and $2,600 per couple. Retirees using IRAs will see that IRA withdrawals will still be treated as charitable distributions. The tax law changed a large number of rules, but many of the provisions most important to retirees were unaffected. Many retirees will see that their tax bill will go down, but not everyone. Now let's move on to discuss updates for small businesses. There is going to be a 20% deduction for businesses with exclusions. So let's get into that. Now, the biggest change all businesses are facing this year is a significant deduction for both pass-through and corporate entities. Pass-through businesses are small businesses structured as S corporations, LLCs or limited liability companies, sole proprietorships, and partnerships. Pass-throughs make up about 95% of U.S. businesses. The new bill provides a 20% deduction for all those businesses. The only limitation is on service-based businesses like law and accounting firms making more than $315,000 per year or $157,500 if single. The next point I'd like to talk about is the 50% increase in first-year equipment and property purchases. Now, the first-year bonus depreciation deduction is increasing from 50% to 100%. In other words, businesses making eligible equipment and property purchases can deduct the full amount of the purchase instead of writing off a portion of the expense each year. And I also wanted to remind all small business owners to keep good books and good records. In the event that you're audited, you want to make sure that you have accurate books and records because this will lead to an accurate tax return. Inaccurate tax returns could lead to stiff penalties if the IRS decides to audit the business tax return. And here are a few of my final thoughts. Consider hiring a tax professional. It may seem easy to complete your own taxes, but tax professionals can assist with any deductions you may have overlooked, provide helpful tax tips, and become a trustworthy resource for future filings. I'm able to operate in all 50 states, and I'm mobile, so I bring my service to you. If you reside in Jacksonville, I will travel to you to pick up all documents needed for filing. I've listed my contact information here. You can call me, text me, or feel free to send me an email. I thank you so much for tuning in, and I hope to speak with you soon.